Alright guys, man, what is good? I'm back for another little episode. I apologize for all this shit, man, because I literally haven't been in the charts for a good week now. I think, what week is it actually? Ending, weekend in the 22nd, right? Yeah. So, yeah, man, I know I ain't been back for a week, and I ain't done any content for about a week now. And yeah, I just apologize for that shit, man, because I've had a lot going on behind the scenes. And yeah, I've just taken this week out to kind of relax, man, and just have a little break, because bro, like sometimes you need to get a rest from this shit, man. I think trading is very full on, and you just gotta take a rest when you need a rest, man, honestly. And I think, there's no shame in that. There's no shame in just coming off social media for a bit, even coming out of the market for a bit and just taking a rest. Because if you burn yourself out, man, it's not going to do you any good. It's not going to do your trading any good, and it's not going to do your lifestyle any good, man. So yeah, if you have any, just take the time off, guys, and that's really what I'm trying to say, man. But I'm back, and I'm going to be back with more content, more stuff. And yeah, I just want to see some interaction from you guys, man. Like, keep doing what you're doing. I appreciate the support. Everyone that views his content, I love you guys. Everyone that shares it, I really appreciate you guys, man. And this stuff is for you. And you've got to remember that this stuff is, I'm only doing it for you, man, so you can get a better understanding of how I do my stuff. And just hopefully get tips for you to improve as well. So, I appreciate all the support, guys, man. I really do. But yeah, let's get into this today. So I'm just going to talk about UJ today specifically. We might talk a bit about a few other concepts later. I'm not sure yet, but I just want to talk about this review. So this trade that I had planned out from last week, and I actually took part of it last week, but I got stopped out on the other half, and that's why I just came in the markets for a week. But I was more or less looking to long UJ, so I'll kind of go through what I was doing and where I was at, right? So if we go into a daily, you can kind of see that like UJ is kind of consolidating at this level, right? So we all know it's bullish because it was making high highs. It burst through this high here, right? Price took out this high. I think it was like the week before last week, right? And this is when I had my prediction when I said, yeah, I want to long it from the 4 hour block that was inside this daily block, and then boom, you got a reaction, and price actually formed a new higher high. So once it did that, I was expecting some sort of retracement back down into these areas, right? So this was initially where I was looking for like long entries, just because it's a typical fib retracement. It was literally like the most obvious place to kind of like start looking for longs, below equilibrium or below like the 50% level, right? But we didn't really do that, and the reason for that is because we have a substantial breaker here, right, which price more or less found support at, and the breaker is just the last up candle that ran stops before price broke above and retested. So just think of these levels as support and resistance, right? That's literally more or less all it is. I mean, it's the simplest way I can really define it to you guys, but I just view a block or mitigation break block as an area or a block which was a bearish candle. So that would have been a bearish block, but price took out stops below this level and this level here. And because of that, when the institutions went short at market at that point to take out these lows, they're going to mitigate their position. So what do? They just literally wait for price to break above that level, and then price will come back and they'll bring price back down to that level to test it, and to close their shorts. And the reason for this is because they just don't want to lose money. It's as simple as that. If they've gone heavily short at that area there, which is indicated by those three very substantial downward bearish candles, right? So they went short at that level really heavily to take out liquidity below the market. They're not going to want to be short in a bullish market. So all they're going to do is just bring price above that level, and then they're going to mitigate their positions when they bring price back down to a level that they got short at. So this is more or less why this level held, because we saw price come up to it, and at this point I was like, all right, so this is the area of support that I was using. This level was no longer of interest to me, specifically at that point in time, because this made more sense than that block. So once that happened, I was like, great, we got our support. So all I did is just went down to a 4 hour, guys. And this is literally as simple as I keep it. I don't do madness. You guys should, you should know me well enough by now. I like to keep stuff very simple and very clean. Just because it gives me, I was going to say a higher consciousness, and not a higher consciousness, but it just gives me a lot more confidence in what I'm doing. Because I am a simple guy, man. I like to keep stuff simple. I ain't basic, but I like to keep my shit simple. So yeah, so we come down to a 4 hour now, and we can see this is the area I marked out. Price barely really dipped into it here, but this is a lower time frame. But what we did see is price come down to the 4 hour block that I marked out previously. So I'm just brought that. So this 4 hour block right on the 4th of April that was formed. This is where I was looking for longs the previous week, and as we can see, price came into this area. Let's get rid of that. Price came into this block here, and we had a reaction of it, right? So it found support at that level there. And then, as you can see, price broke above that high there, intermediate high, took out the intermediate high, came back down into this block here, kind of wicked through it, but as you can see, the body, the candle closes always stayed above the body of the block, and that's really important. Like price can wick below, and it can, it can wick to take a liquidity, wick to do whatever the fuck it wants to do. Don't think I'm some magician. I understand price, but there'll be some things that are alien to all of us, right? And sometimes blocks hold, but as long as the body of the block or equilibrium of the block, as long as price doesn't close below that level, this block most likely will hold. So that's what happened here. As you can see, price wick below, tested the level, and then boom, straight reaction, right? And it formed a new structure high after taking out this intermediate high, and after taking out this significant high, right? So after this was taken out, this was a clear bullish signal for me, and the dollar was bullish this week as well. So I had like two sets of confluences, or two market correlations for this. So I had UJ making higher highs, high lows. We had yen weakness as well, and we had a lot of strength in the dollar, which is why we saw stupid moves on like cable and fiber. Like the stupid moves I missed this week, man. I can't even. I'm not even gonna go into it because they try and make man vex. But it was, there's some crazy moves we saw, some big expansions this week, and that was mainly down to dollar strength, man. So because I knew the dollar was going to be strong this week, I was looking for an entry off of UJ, off of this 4 hour block here. So I think I took a short on Monday, and that was a short that I took around here, which I'll explain in a sec. But the only reason why I took a short in this pair is because I was expecting price to retrace back down to this area. And yeah, I do counter trend, guys. I do take trends that are counter the trend a lot of the time now. I would say about 50-50, but it's only because I know what I'm doing, and it's because I have high frame targets like this, or high time frame targets like this. So if I want to go long on a pair, if I see an opportunity to short it, I will most likely short the pair down to my area of support, or down to the area where I think price is going to react off, and I'm going to take on my main position. And this, I would say, when you first start, just focus on waiting for your actual setup to occur. Don't try to be doing madness, but because I'm kind of confident with this pair specifically, and I know the way UJ likes to move, then I took a short, and that's the reason why I took the short. So let's just run you through the short first, so you can get a grasp of what I was looking for, and then why I took level. So as you can see, right, price made a higher high, so it took the liquidity out of the previous day, and it made a higher high, right? And what that meant for me is that I thought, right, great, price is taking out liquidity. So I was then looking for price to go short. And the main reason for this is because we had, I would say quite a bit of liquidity or inefficiency in the market. So we had a big bullish candle here, right? So there's just going to 100% be residing orders within that within that candle, right? 100%. So for me, because I saw so many bullish candles, right, with such efficiency, and I saw a low like this, right, in an intermediate low. Intermediate low for me is just a low within the range, or within the main range, right? I just 100% knew there's going to be orders residing below that low and inside this area here. And that lined up really well with this area here, firstly. So that block here, which I wanted to long price from. And it also lined up with the retracement that was happening on the dollar at the time. So for me, this was like one of the perfect entries of the week. I thought if I get entry here, I can hold to that high and I'm sorted for the whole week. I ain't going to do anything. So that's why I then started looking for a short at this point here, because I expected price to retrace fairly aggressively to fill in the orders residing within, that big candle there and below the low. So the way I kind of trade UJ mainly is that this is just a personal thing, but I trade cable and I trade fiber in a specific way. If I'm intraday trading cable and fiber, what I tend to do usually is that I will look for a setup within London Open. And the main reason for this is just because if I'm trading those two pairs, I know that the body of the moves, or the low of the day or the low of the week, or high of the week or high of the day, right, it's most likely going to be set within a certain time. Or the setup that I'm looking for is going to happen in a certain time. And the kind of setup that I look for is a fib retracement setup into a block. That's more or less all I'm really doing. If I'm trading cable and fiber, that's what I'm doing intraday. If I'm trading like UJ, I'm also doing that intraday because I do trade UJ intraday mainly. And I will look for those setups to occur in a certain time frame or a certain time period, time of day, whatever you want to call it. But I look for it to occur in a certain time frame. So when it came to UJ and shorts, right, because of that, I was more or less looking for a OTE setup inside the Asian range, and this is because like for UJ, right, the Asian range is like as more or less as sensitive as the London Open with the dollar pairs or the pound pairs and the euro pairs, right? It's the same thing. Like UJ usually will react within the Asian session and the New York session, and that's just how the pair likes to move, honestly. So what I was looking for is a retracement, so a fib retracement, right, back into the range if I wanted to go short, and this came in the form of this retracement here. So I was looking to go short when price came back into this range, right, and I just go and enlarge it for you a bit. Let's go into a 15-minute just so it makes more sense to you guys. So this is what I was really looking for, right? And the reason for this is because, as you can see, price had open here, gapped up, and what it did is it came into a bearish block. And this is the area that I was specifically looking to take a short at. So as you can see, price literally just did a retracement from that leg to that leg, boom, came into the, let's see what OT area this came into. So it came into the 62 retracement level. And what I tend to do, guys, is I'll look for two sets of confluences on trades that I take. So this is the first thing I want to see. I want to see retracement within the right time of day. And I also want to see it come into an area of resistance or an area of support. And this was the area for me. So what I was going to do is that I did set a limit initially for the body of this block, right? And I used about 4 pip stop, 4.5 pip stop for this, which is kind of wide for this anyway, because usually it doesn't even move that much. And I like to try and get like a 2 pip stop loss for this, including the spread. Like I like to take the piss with this a lot because sometimes like this pair doesn't really have much drawdown, just because it moves so fucking slow. So this is the level that I marked out. It was a bearish block, and I initially set a limit for the body of that level, and like as you can see, price just swerved the fuck out of me. Like it literally went up. Even if price did come to that level, it wouldn't have put me in any way because of the spread. So all I literally did is just waited for a retracement, and that's exactly what happened on a 5-minute time frame. And I'll show you guys what I mean. So I literally waited for the high to be made. Boom, we got a retracement there. I didn't initially get onto that one just because I was a bit slow. So what I basically did is I waited for a little market structure break on a 5-minute time frame, which was for this low to be taken out and that gap to be filled in. And as you can see, that's exactly what happened. So we've got that little mini retracement there. I didn't go short from that initial level. Didn't go short from this level here either. Why? Because it didn't come into a block. And I'm very specific about certain things. So all I really did is just wait for that level to be taken out and for that gap to be filled in. Boom. Once that happened, we got a retracement into here, and I made sure I got into this one, guys. So I literally, including the spread, it was about, what's that? It was about, still about 4 pip entry, right? So this is the kind of trade that I had on. And I literally took an entry from there. Took the majority of my position off at this low. So let's just zoom out for you guys to see. So the majority of my position I took off around this low here. And that was just so I could just eat a little bit from the trade before we did what I needed to do. So I took about a 6R off there, about good 60% I think I took off there, 65%. And then I literally just left the rest to run, and that hit 15R. So it would have been about, let's say I took off 60%. It would have been about a 10R if I when I let price run down to that level. So I made about another 9R on that, but because I already taken 65% off, it kind of equals out to be like 3-4 hours, something like that. So I made about like a 9-10 hour out of this in the end, really in total. But this is how I kind of frame what I'm doing, guys. It's more or less understanding where price is bouncing on the higher time frame level. So literally understanding which 4 hour levels I want to long or short something off of, and I just intraday price down to those levels inside the right time of day. That's all I'm doing. So if I'm expecting price to go short, I mark out my levels. I literally use these blocks as magnet levels. Just understand these levels to be magnets. Price is going to be drawn to them. If you want to take a long position from a key level, it's just the same thing as key like support and resistance levels. You mark them out, and you know at this level you want to go long, at that level you want to go short. You can just use these as magnet levels to trade intraday as well. That's all I'm doing, guys. I'm literally just waiting for price to come down to these levels, and while it's doing that, I just go down to a lower time frame in the right time of day, like we're talking about now, like Asian session or the New York session. Boom, that's your Asian session setup. Retracement up into an OTE, into a block. Boom, short back down to your 4 hour key level. Look at the precision on that. The body of the block didn't even get permeated, hardly. So, you know, this is what I really do, guys. I mean, if you want to really get tight R's and you want to just make the most out of your trades, 100%, there's nothing wrong taking entries, right, with like a 30 pip stop loss or 35 pip stop loss. There's nothing wrong with getting 3-4R, because if you wanted to, you could have just waited for price to come back down to that level. Used about, let's just pull out the fibs for a sec. You could have used how big would that stop loss have been? About a 20 pip stop loss, right? And you could have got a 5 out of that trade. So you could have just waited for your trade to happen, you know, use a 20 pip stop loss, taken 5 out of that trade, and you'd have been fine. Right? There's nothing wrong with doing that, guys. Honestly, there's nothing wrong. If you want to just wait, if 5 hours your target, 5 hours your target. But I've had a lot of people that have been asking me, you know, how I take trades, why do I get so many R's in them, why do I look for so many R's? And the reason for this is because when I started doing trading, you know, when I started actually putting trades on, you know, doing my risk management properly, doing everything how it's meant to be done, right, as a trader, what I would find is that I wouldn't really be that satisfied making 3 to 4 hours. As much as, you know, it's good when I started, I wanted to kind of maximize what I was doing and how I was doing it. And for me, I think risking a bit less and going after bigger R's just suits my style of trading a lot better. And for me, I can get stopped out 2-3 times, because that's what will happen, you know, guys. Don't think that all the time I put in a trade and boom, straight profit. Like, I will get stopped out and have to re-enter maybe like once, twice, 3 times if necessary. But the reason why it doesn't bother me is because I know I'm going to be getting like 6-7 out of a trade, and that's just a counter trend trade. You know, we haven't even talked about the long setup yet. But this is the reason why I do it, because as you can see, if I held my full position, right, and didn't take off anything at that low first, right, that would have been a 15-hour trade. If I'm risking 1%, that's 15%. I don't care what your account balance is. If you're making 15% off a counter trend trade before you have even come to your main setup, right, you know, you know, there's not much else you really need to be doing to be very successful. So it just comes down to these things. What is your setup? What do you like doing? What are you trying to achieve from the market? And what are you consistent at doing? And I know there's a lot. I know that's a fuckload of questions, guys, but just simplify it down to what is comfortable for you and what can you do consistently. And it always comes down to that. You know, it took me a while to get consistent using R's and stuff and being able to predict which levels are going to hold. But, you know, you just understand what you're doing, understand what you're consistent with, and just go from there and build up, guys, all right? Always just do that. You'll do a lot better doing that. So, for me, what I then did is that when price came down to this daily level, or 4 hour level, this is when I started looking for long positions, right? So we can get rid of that now. Get rid of that too. And I'm not going to lie, guys, when it came down to this level, I couldn't really be bothered, because I had a lot going on this week, as you know. And I literally just wanted to take this with the most efficiency as I could. So what I really did is I waited for price to come back down to this level, as you can see. And I dropped down to a 30-minute time frame. So what I wanted to see is price take out this level here, take out that high, and I want to see a retracement back down within to this level. And at this point, guys, I wasn't even looking at charts. I literally put a set and forget thing on this time. I put on about, I used this block here just because I knew that price had already come in. This block was a block that had tested the previous 4-hour level, which was here. And I knew that if I was wrong, you know, then, and this level didn't hold, then I was most likely going to be wrong about this whole trade. And I understand that, look, price did come right down, like, right through that block and it spiked right through, but, you know, you're not going to be perfect every time. And because I already secured about a good 9 hour out of that trade anyway, it didn't really bother me this much. So I kind of knew that I had a lot of breathing room for this. I could have got stopped out 2-3 times and it wouldn't matter. But at this point, I just wanted to put the thing on and just set it and forget and leave it to do the thing. So what happened is that I initially went and I set a limit for this area here just so I could get in. I wasn't really bothered about precision this time. I just wanted to get in the thing, get out. So I set a limit for that level, got stuck in the trade. As you can see, price wicked down through that block, and then it just wicked back up and started consolidating, and then boom, massive expansion, right? And at this point, I did come back later in the week, so I was monitoring it as much as I just left it. I did check it like once a day, but I wasn't trimming my position, adding another position, because what I do is I just trim down a position, add another one, for example. Let's say I was using breakers, right? Let's say I want to get another position on this. What I'd be doing is probably using this level here as support again, while it's a breaker, take out those dots below there. And that's the level I probably would have used to get in again and try and get another position again. Or I would have waited for price to come to this level and then wait for it to retest that block, as you can see, stop below there and target highs again. So usually what I'll do is layer up, but this week I just wanted to get into the trade, just get it sorted out. And let it do the thing because I had a lot of stuff going on. But more or less, the result of this trade really, after I said it, would have been like a solid. It would have been a solid 8R, right? 8-9R. But I got out around this level midweek, and that's just because after price hit this block here, right? So that's literally the level that I shorted price from. After it hit that level, it started to consolidate, and I just closed the trade for about like a 4.5 or 5 hour at this point. So it hit that level, came back down, started consolidating around this, and I just thought to myself, as much as it's most likely going to go higher, I just wanted to get out, and I literally finished my week with like a good 14 hour, 15 hours. So it wasn't even that deep, but this is the reason why, because price came into an hourly block and I just wanted to get out. In hindsight, what I could have done, and what I'd advise some of you guys to actually do, is if you're unsure about price actually going higher or actually reaching your ultimate targets, which would have been this high here, right? Then just take off like 60-70% and just literally move your stop to break even, or maybe like 1 or 2 R in position or below the next significant low, and just let it do its thing. Like if it's going to stop you out, stop you out. But if it doesn't, then at least you've made an extra percentage, an extra R on top of what you just put in. So this is where it comes down to managing your actual shit, because you can manage your stuff and make the most out of one move in a week and really make bank on 1 week. Like you could have literally come into this level here. You could have longed it again there. You could have waited for price to come back down to a level here, gone into a low time from going entry there. You can even have tried to get an entry here again. I don't even know. I wouldn't have longed it from here, but I'm just saying you could layer up so many different levels, right? You can keep layering up if you really wanted to, and you could have really compounded and compounded again and again on this. So it just comes down to your personal preference and what suits your style better, and how far you really want to take your entries, and how far what you're comfortable with. But for me, this week I just wanted to get this week over and done with. As much as there were so many opportunities I missed this week, it is what it is, man. It is what it is. I'm not really going to say that I'm, that disappointed about it. Like, yeah, I'm disappointed I missed out on quite a few moves, but, there's a lot going on in something, you guys. So, yeah, I mean, just keep it simple, really. The whole purpose of this is just to show you, like, how you can literally just take, a few trades a week with a few entries a week and literally, set and forget it, almost. So it just comes down to your preference, guys. And what you're good at, and yeah, just focus on you, man. Honestly, focus on you, and just keep getting better. Every week, once you finish the week, you literally go on your thing, journal it, reflect on what you've done. But even back test, what I like doing as well is actually back testing the whole week. So like this, how this week has gone through. What I spent today doing is literally just back testing where I would have got better entries on this week, how I could have improved. And I think this is a good thing that you guys should do as well. If you've had a good week, is also just go back and back test and see where you could have done even better. Because what I'll do next time is that you actually see entries that you wouldn't have seen the previous week, and you can smack them so nicely, and you'll be like, all right, great. Because prices on that, then I can now get entry here. It's just literally doing better on what you've actually done, just like constantly improving yourself. So yeah, man. Honestly, that's the way that I did it this week. That's what I was looking for, and I hope you guys actually got something out of it. Shit, did I even put a limit on there? All right. Good. Yeah, stay focused, guys. Stay humble, and yeah, keep grinding, man. All right, man. Take care, guys. If you need me, hit me up on socials, like, subscribe, comment, all of that, and bless out, man.